All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, ladies and gentlemen, the 9th of December, 2025. And yes, it is an interesting week, an interesting day. And, well, basically, I'm here to talk about an interesting day tomorrow. Look, tomorrow we have the Bank of Canada and the Federal Reserve delivering their interest rates. We had the RBA this morning delivering rates as well, so I'll pick up on that as well very quickly. And on Wednesday, on Thursday, we're gonna get the Swiss National Bank interest rate decision as well. So look, about all that and a little bit more in a moment, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere, so, yes. So basically, we are having this nice week of the central bank extravaganza, and yes, it will be a fun moment to watch tomorrow's trading activity. Also, look, very quickly before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the economic calendar. Let me just actually refresh it. Maybe something has updated already. So yes, in a moment we're going to be well at the time of writing, at the time of recording this webinar, we still are waiting for the JOLTS numbers. So basically, it's kind of the last somewhat of a labor data that the Fed will get before tomorrow's meeting. So yes, as I said, this morning we had the Australian RBA delivering interest rates. They decided to keep the rates unchanged at 3.65. So this has been the third no-go by the Australian central bank. And in general, they had like three cuts this year. So this was the last one for the year. So yes, three cuts. Okay, so quite decent. I mean, in general, I think that it was expected. Nothing major there. The Australian dollar kind of remains elevated somewhat. It is kind of on the stronger side, so maybe just because of the fact that we're not getting those rate cuts any further. So certainly the 2026 situation is still a little bit unclear. But nevertheless, we're going to be keeping a close eye on that Australian dollar and, of course, the RBA. So there is a chance that this could actually go further south a little bit, maybe closer to 3%. So let's see what's going to happen in the next year. Now, coming back to the economic calendar here. So yeah, so this is, like I said, this is what was happening today, Wednesday, tomorrow. Yep, the big banks are delivering. So the BOC interest rate decision. Look, another central bank which is willing to keep their rates unchanged at 2.25. I don't know if there's going to be a surprise or not. Basically, if they're going to do a surprise cut to 25 by 25 basis point by 25 basis points, then in a way they're going to drop their rate well even lower than the ECB, which is currently sitting at 2.15, and they are deciding next week actually. But you can check out one of my videos that I did here on YouTube in the beginning of this month, the top central bank decisions this December. So this is what I was talking about basically. But look, right now the focus is on these banks that are delivering this week. So yes, the Bank of Canada at the moment is expected to keep the rates unchanged. Maybe that's why we're also seeing Australian dollar kind of on the having the upper hand against the US dollar or against some other currencies. I'll jump in a bit into the forex world, but certainly this is something to keep an eye on. And I think that the Canadian dollar could continue could continue kind of drifting, or not drifting, but let's say remaining on the stronger side. Now, look, the big boy, the Federal Reserve, is coming out later on, and those guys there are expected to cut the rates by 25 basis points. Now, is this something that that could bring the U.S. dollar lower? In a way, the U.S. dollar right now is actually, I think that they're pricing it all in. I think that they already understand that there's going to be a cut. I think what they're more interested in, and if I look at DXY, for example, right now, you can see that the DXY is kind of pumping a little bit higher here, trying to push, and trying to stay above that 99 zone. Again, like I said, it's going to be an interesting moment because on one hand you have the Federal Reserve, which is cutting, which is in a way bad for the U.S. dollar, and in a way, if the rate comes out with a cut, I mean, if they do a cut on the rate, and then this is where it could push the U.S. dollar lower a little bit. In theory, everything is, like I said, all this is looking good in theory. However, I think what's going to be interesting is that how the press conference is going to go. That's, of course, that's understandable. Everybody's watching the press conference, but are they actually going to say that, look, we want to do more cuts straight away at the beginning of 2026? If so, then we could see, I think, a stronger sell-off in the U.S. dollar. However, if they're going to say, look, we're going to take a pause, I think that's enough for now, and maybe we're in for the first kind of few months in 2026. We're just gonna chill and we're not gonna do anything. Now that actually, given the rate cut that's gonna happen tomorrow, if we get something like that, like wording close to that, then in my opinion, like I said, this could actually strengthen the U.S. dollar, and we could see actually this one maybe pumping back towards the psychological 100 level. Where did all my levels go and disappear here? There we go. So long story short, for now, I would say, look, if you want to predict something, I would strongly recommend not to do so. It's better always to wait for the reaction, let it settle down, and then do something about it, because at this point it just could be a little bit of a way too much of a gamble. So long story short, keep your eyes on the Fed. I think that this is, like I said, DXY is certainly an interesting instrument to trade and to keep an eye on. So, and it will have its the rate decision will have its effect, but probably, like I said, the press conference will be even more interesting for DXY traders. Now, in looking at the currency world, look, AUD is still on the stronger side here. However, we're finding strong resistance near this downside line, which is taken from the high of the 30th of September. So, in a way, I talked about this previously. I said, look, if we do cross above this 0.6580 territory, my next target is only around here, near this downside line. There we go. Tick. Great result, great test. And now the question is, can we actually break this downside line? Because currently you can see that we're in a somewhat of a squeeze. I mean, we're not picture perfect, to be honest, because we have a big gap here. So we're somewhat in a squeeze, and but I think let's just focus on the fact that there is a downside line which is providing resistance. So if we do get a clearance of that one, it opens the door to some higher levels. Now, in terms of Euro USD, certainly this one, like I said, it will have a good move. At least I'm hoping to see something of a good move. And like I said, if the US dollar will strengthen a little bit, then Euro USD might beautifully here drift to the downside. My only problem right now, looking at this chart, looking at the technical picture on my chart, on my daily chart, these EMAs here, the green one, the 50-day, and the blue one, the 100. So basically, they could kind of provide some sort of support, and so we could see a little bit of a drift lower, test these EMAs, and then rebound back up. However, if you're not really comfortable with something like that, I totally get you. So you can keep an eye on the 1.1650, which, look, it gets violated, certainly, but somehow it's a good area to watch and good level to watch. So if we do push back above it and somehow stay above it, then I'm going to start considering a move back up. Now, jumping into actually, the big pair which you should keep an eye on tomorrow because of the two central banks, the BOC and the Fed, is the USD CAD. Now, look at this beautiful move that we had here back on Friday, and the Canadian dollar strengthened really well. This was driven by the unemployment rate that came out fantastic for Canada, so some strength there. Also, a little bit of positivity in oil market. So everything aligned, all the stars aligned, and there we go, boom. But now, like I said, what I'm looking at is that if we're going to stay somewhere below that 1.3891 zone, 90 zone, or if you want to, do it this way, then okay, look, I mean, it could be an interesting option for, considering the downside scenario. Because if this holds, it just could form something maybe of a bearish flag of some sort, maybe a pennant, who knows, maybe like it'll take some time. But again, looking at this, I mean, it would be such a waste of a nice pole. So maybe a formation of like a flag or a triangle would be nice, to be honest. So even then, still probably the better option is just to wait for a drop below the 1.38 zone, and this way a forthcoming lower low will be confirmed. USD JPY very quickly. This one's pushing higher, but again, I think that there is still risk on somewhere out there, despite a little bit of selling activity which we saw yesterday in the stock market. However, overall, the market is somewhat elevated, and I think that there is room for the upside. So don't kind of, and again, USD JPY, there we go. I mean, if DXY somehow strengthens, then we could see this one pushing actually further north. Now, certainly keep your eyes on this pair going into next week, because next week we have the BOJ, Bank of Japan, where they are expecting to where the market is expecting them to to hike rates actually, and this could in a way help strengthen the Japanese yen. So maybe, a reversal back down could be possible next week. So for this week, maybe we're done, in terms of or already sorted with the fact that it could go higher, this USD JPY pair. So, but again, that's just theory. Let's see, that this is just my own personal speculation. So let's see what's going to happen. And the final pair that I want to finish this one off is with the USD CHF, because like I said, this one is quite interesting because look, since September we have been forming higher lows. So in a way, a good indication that the market is fighting. But the fact that we're struggling to create a higher high, now that's another problem. So from around the beginning of November, we're actually trading below this downside line, which we are actually testing now. So let's see if this idea of going for higher lows continues. But it would be great if we could actually see a break here, a break of this downside line. If we do get a break, then certainly I'm going to aim for the highest point of November, or maybe even highest point of August, and then we'll go from there. For the downside, I'm actually taking a little bit of a conservative approach, and I'm waiting for a drop below the 0.7990 zone right here. That's the low of last week, and I think this would be a little bit of a safer option. So, ladies and gentlemen, I hope that helps. I'll wrap it up here. Thank you very much for watching and listening. As always, I hope you will, smash that like button and subscribe, and all the usual things that we ask you to do. But it does really help me a lot. So, ladies and gentlemen, let me know in the comments what you think. Do you agree or not? And it would be really know your opinion. It would be really great to know your opinion. So, yeah. In that case, look, I'll see you next time in my next little video update. Bye for now.